Singapore, despite its relatively small geographic size, wields significant economic power and influence on the global stage. As a financial hub of Asia, Singapore's investment strategies, especially when directed towards its larger neighbors, often set the tone for the rest of the region. China's real estate industry, a case for today's video, has emerged as one of the most important investment destinations around the world. Foreign investors, ranging from the United States to Europe and East Asia, have poured billions, or even collectively trillions of dollars over the course of time. Singapore, with its keen business acumen and eye for profitable ventures, hasn't missed out on this. The growth story of China's real estate market isn't just about the vastness of its land, but also its economic growth, urbanization trends, and government policies which have, more often than not, been favorable for foreign investors. This backdrop creates a conducive environment for real estate investments, which has been clearly observed in our sources. But one of the most interesting questions people have is just how much is Singapore really investing in China's real estate industry? How many apartments, commercial complexes, to office towers, and/or just development have they been involved in? Well, trust me, Singapore and its companies have poured shocking numbers into China. And no, it is not only done through Singapore being a financial center. In fact, some of Singapore's government-owned companies are the active investors themselves. Well, let's cut to the chase and immediately find out who the major players are and just how big they really are in China. At the forefront of these ventures is CapitaLand, one of Asia's largest diversified real estate groups. Not new to the game, CapitaLand has consistently made headlines with its Chinese ventures. They've executed a series of acquisitions and sales, showcasing their dynamic approach to the market. CapitaLand and China Trust, also known as Singapore's largest China-focused S-REIT, has a total asset of over 5.2 billion Singaporean dollars. They own several malls all across China, some under the brand name of Capital Mall. They also own business parks and logistics parks, which are also massive. Separately from the REIT itself, CapitaLand has also made bolder moves. These include a data center acquisition, 2 Shanghai office buildings, and even stakes in some of China's largest real estate companies. However, CapitaLand isn't the only one vying for a piece of the pie. GIC, Singapore's sovereign wealth fund, has also made significant inroads. GIC's exploration of Chinese investment opportunities, especially its attention to Chinese property assets, indicates a long-term vision banking on the sustained growth of the Chinese economy and its real estate sector. This is because GIC is a sovereign wealth fund. It is one of the most important types of investment vehicles around the world. Some of the largest acquisitions made by GIC is when it acquired LG Group's China headquarters for a whopping $1.6 billion. These twin towers hold great value in China's real estate market. The asset itself holds over 140,000 square meters worth of gross floor area. Furthermore, GIC holds or used to hold stakes at some of China's largest real estate companies. On top of these two giants, there are also several other massive real estate companies. These include Mapletree, another giant Singaporean company. There is also Global Logistics Property, or GLP for short, which is in fact one of the world's largest logistics service providers, with assets under management more than $100 billion. Although it is true that GLP is one of those businesses that are in Singapore for name purposes, they are still incorporated in the country and are contributing to its local economy. Now, of course, these few names are just some of the many out there. We have yet to mention Temasek Holdings, other major private companies, and so on. But what stands clear is that Singapore and its companies have a massive stake in China's real estate sector. These stakes are significant enough to even impact China and its economy. In fact, let's get into that real quick. So what are the broader implications of Singapore's real estate investments in China? What does it mean for China? And how does this financial infusion shape its urban landscapes and economic prospects? Well, firstly, Singapore's substantial investments, especially in sectors like real estate, are a vote of confidence in China's stability and growth potential. When international investors, particularly from economically advanced nations like Singapore, pump money into the country, it not only boosts immediate economic activity, but also fosters a positive image of China in the global financial landscape. Real estate, being a tangible asset, has direct impacts on employment and infrastructure development. Projects initiated by Singaporean firms have contributed to job creation in construction, management, and ancillary services. As these structures rise, so do opportunities for local businesses and residents. Furthermore, Singapore's real estate development can also help China's housing prices. The more supply there is in the market, after all, can always help affordability. Another less evident but equally vital impact is the exchange of best practices and knowledge. Singapore, known for its meticulous urban planning and efficient real estate management, brings its expertise to the table. Chinese developers and authorities can benefit from Singapore's experiences, refining their approaches and enhancing their projects' overall quality. However, every coin has two sides. With increased foreign investments, there's always a concern about the overheating of the property market. Excessive demand can lead to inflated property prices, potentially sidelining domestic buyers. Thus, it's crucial for Chinese regulators to maintain a balance, ensuring that foreign investments don't inadvertently lead to real estate bubbles. Moreover, there are talks about China's real estate crisis. People may already know about China's ghost cities, where tons of cities have been built, yet a seemingly small number of citizens live there. These present an opposite to the China favorable factor, where investors come into China to seek a piece of its economic growth, yet don't really see them due to these circumstances. However, it can be said that Singapore's investment prowess is good enough to avoid these. It is still possible that they are affected by these issues, as these problems are left all across the country. Now, let us take a look back and see what this means for Singapore. First, the impact on Singapore is already huge. They are going to immediately profit from all, if not most, of their investments in China. China's economy has rapidly grown over the past few decades, and analysts still expect them to grow further into the future. Their stakes in the country's real estate development will feel this over time. Secondly, it is also inherent that China is just one of their positions. Take, for instance, GIC and Temasek Holdings. Both sovereign wealth funds hold vast amounts of positions all across the world, from the United States to Europe and even in its home country. Their position in China is just one of the many out there, and a diversification like these can present a safety net. Now, thirdly, whenever Singapore profits from these investments, it turns into reserves. How? Well, let me explain. When, for instance, Temasek Holdings acquires a company overseas for an X amount of money and then sells them at a profit, they will, in turn, get that money back into their home country. These then add up to the overall reserves portfolio of the Singaporean economy, which will most likely help increase its standing in the financial world. But aside from investing in ghost cities, are there any more risks to Singapore's investments in China? Well, there are surely a lot of risks when it comes to investment. One of them, however, involves the issues of geopolitics. Singapore is still playing the power dynamics between China and the US. These two countries are still heating up tensions as of the time of this recording, and with Singapore's role as an investor in both countries, it is likely that the island nation may need to maintain a good relationship with the two as time goes on. Yeah, good luck with that. So okay, who gets the most benefit at the end of the day? Well, one can say both of them do. China gets its fair share of foreign investments, and Singapore gets its fair share of profits from those investments. Now finally, one of the most perplexing questions is the importance of Singapore to China's real estate sector. Yes, most people often think that Singapore is very important to China's economy. Indeed, they are, but it cannot be overstated by much. Singapore, true to its core, has invested hundreds of billions of dollars over decades into China. Sure, it has helped China's economy, but even if Singapore did not participate in the country, there are others out there that will and that did over time. The United States, for instance, is one of those. In conclusion, Singapore's real estate investments in China signify more than just monetary transactions. They represent trust, collaboration, and a shared vision for the future. While the economic benefits are evident, the socio-cultural and knowledge exchanges enrich the relationship even further. As we end this video, it's essential to recognize that in this era of globalization, such collaborations are not just about profit, but about building bridges and fostering mutual growth. But anyway, do let us know what you think. Thanks for watching.